Well, the way you get your next mortgage may change after the Royal Commission recommended a ban on broker commissions. It could mean that Aussies pay a mortgage broker directly thousands of dollars up front to get that home loan.
Yeah, the mortgage broking industry has slammed the report, warning it could ruin the 20,000 mortgage brokers and their employees and lead to all of us paying higher interest rates. Mike Felton is the CEO of the Mortgage and Finance Association of Australia, and he's with us now from Canberra. And Mike, I think it's fair to say most of the commentary today has said that mortgage brokers are the biggest losers in all of this. Do you see your industry as the fall guys for the big banks who've done most of the misdeeds?
Without doubt. I think if you look at this report, it's a particularly poor outcome for brokers and for customers, but a huge win for the big banks in that they not only get the customer to pay for the broker, but they also potentially are able to charge a brand new multi-thousand-dollar fee to every customer going into a branch seeking to arrange a home loan. Whichever way you slice and dice that is a brand new multi-thousand-dollar tax on borrowing, and potentially it would be very destructive to the broker channel, at a huge cost to competition and access to credit, and would simply entrench bank power.
So, Mike, how do we arrive then, there's a fair bit there I'd like to unpack, how do we arrive at what was in the Royal Commission report to everybody having to pay thousands of dollars whenever they want to take a new mortgage out?
Well, at present you have the lender paying the broker an upfront, and they used to pay all of it upfront, but a number of years ago they decided to make a portion of it contingent upon a good customer outcome. So you have a portion that is paid subject to the loan remaining out of arrears, not being refinanced or not involving fraud, but it was still the lender paying. That portion is going to be abolished, which we don't agree with, and in fact we feel that the commentary was at odds with ASIC's commentary. Sorry, the findings were at odds with ASIC's commentary and the Treasury commentary. But I think the bigger issue here is the suggestion that there should be a consumer fee for service going forward. Research has proven that customers do not want to pay a broker. In fact, recent research showed that 96.5% of customers would not pay the average upfront. In that case, you are going to have customers deserting the channel, and that will result in less access to smaller lenders and credit, and force the customers back into the branches, handing power back to the majors, making it harder and more expensive to get a home loan.
In the face of it, though, if consumers have said they don't want to pay that upfront fee, does that just reflect the fact that they don't think that's value for money? They don't want to pay it because it's not worth it?
No, they don't pay it to their current lender. The lender has always paid their own acquisition costs through the branch, and traditionally they've paid their acquisition costs. When I say acquisition costs, the cost of acquiring a new customer through the broker. And you know, people get used to that. If you suddenly have if you've had a service at no direct cost to yourself over the past 10 years, and suddenly you ask to pay a multi-thousand-dollar fee for that service, and by the way, for the privilege of going to the bank direct as well, people are reluctant to do that. And in fact, the data shows that 60% of customers would be reluctant to pay anything. That would result in those customers deserting the channel and potentially devastating it.
Right. Mike, to your other point about potentially driving more people to the big four banks, if mortgage brokers exist now to promote competition and promote lending through the smaller banks, then why is it that 80% of Australian mortgages are currently held with the big four banks?
Well, it's interesting. There's some interesting statistic. That figure that is held by the majors is coming down dramatically, and the reason for that is because of the increased diversification of the big four share of, the reduced share that the big four have of broker channel, and the increased diversification of lenders that brokers are using. In fact, over the last 5 years, the big four share of broker channel has come down from 58.5% to 45.7%. And if you look at that differently, any lender in the market that is in no way affiliated with the four majors, their market share has gone up 51%. That's a phenomenal performance and demonstrates how brokers are driving competition.
One of the things inside that report was about that the commercial responsibility should be shifted away from the lender towards the borrower. So this is where there'd be a duty to always act in the best interest of customers. So you wouldn't have a problem with that, I imagine, would you?
No, not at all. That it makes absolute sense. At the moment, a broker would argue that they act in their customers' best interests, but certainly making that a legal duty clears it up, and we would have no issue with that. I mean, obviously, a broker has access to at times $2,500 on their panel, so we need to define it in a sensible way that is appropriate for the channel. But in principle, no, we would agree with that and think that that would again be a good offset for conflicted remuneration.
Mike, if banks are to save potentially hundreds of billions, if not trillions of dollars over a period of years, if payments to brokers stop, given the heightened regulatory environment, who's to say that they absolutely will not reinvest that money into lowering rates and improving customer services?
Banks have, according to Credit Suisse, will save between $800 and $1.6 billion per annum. And at the end of the day, they represent their shareholders first. I think the assumption that that would go back to customers is not a correct one. And in fact, we saw testimony during the Royal Commission where one of the majors spoke about cutting broker remuneration by 2/3 and saving $197 million over 5 years. If they were making that saving, then clearly it's not going back to the consumer.
Yeah, I think probably consumers feel that in this the mood that we're in, maybe that's quite true. So what's your message to your members at the moment? Because again, it's also, all of this is all rolled into how the government's kind of responded to it. There's this lead-in period, it won't happen straight away. So exactly what are brokers doing out there, and how should they be right now adjusting their own business models, adapting their skills? Are they supposed to be retraining? What are they doing right now?
It's very hard to suggest, because under that consumer fee-for-service model, the research shows that we all have a substantially smaller channel. I would like to say that we certainly do welcome the government's more measured and realistic response to it. We will continue to work with policymakers to make sure that they prioritise customer interests and not big bank interests at the end of the day, and that they seek to preserve competition, access to credit. I would ask our brokers to continue to produce the amazing outcomes that they do, and the incredible data that we have in our industry, which is now at a record 59.1%, having grown 3.4% market share over the past year of the Royal Commission, which I think is sends a telling message in itself. But we would say keep doing what you're doing, and we will work with policymakers to ensure that competition is as protected as far as it can be.
Right, Mike, just on Brooke's point there, do you have no hope then that the mortgage brokers will be able to innovate their way out of this crisis that they find themselves in and continue to offer possibly a better outcome for customers?
Your downside is that as soon as you're only earning an upfront fee, you become a hunter, dependent on the next deal, and you could end up with unnecessary churn, unnecessary refinancing. The other way to work your way through it is to diversify. But we've seen that cross-selling all over the world become a bit of a dirty word, and we don't really want brokers to be cross-selling way beyond their market and their area of expertise. So while we encourage brokers to diversify into commercial, potentially into personal loans, etc., there is a limited ability to do that, to replace what is the lion's share of their income. So I think it's about reforming. We've had an industry that has strongly reformed over 18 months. We've brought in a number of reforms through the Combined Industry Forum to address these conflicts, but it's about doing it in a way that protects competition and choice and access to credit, which has been very tight over the last 12 months, and we certainly don't want to make that any worse.
Mike, thank you so much. A big day and a big few years ahead, no doubt, for your members, and we appreciate you coming on and explaining some of the issues. Thank you.
Thank you for having me.